So a final strategy, lastly but not least, our third really good strategy for trading options is the Iron Condor. Now the Iron Condor, if we have a look at the excellent explanation for it, the Iron Condor is an option strategy that allows investor to bet on relatively stable stability of an underlying asset. Okay, so a typical traditional Iron Condor, we use it in a very traditional way, and we basically want stock to range. Okay, so let's have a look at AAPL, in fact, which is the example we've always had a look at. This is actually not a bad example because it's kind of ranging at this moment in time. However, personally I have enhanced the traditional Iron Condor strategy somewhat. Okay, I've enhanced it and I've tweaked it a little bit to trade it in my own way, in the sense that, so a traditional Iron Condor, what you're doing is you want basically the price of an instrument to range, okay, like that, and as long as it finishes in that range, you're going to make money. But if it goes above it, you lose money. If it goes down below it, you lose money. The way how I have changed this strategy a little bit is that I have changed it in such a way that we have no risk on the upside. So no matter how high it goes, we have no risk on the upside, only on the downside, and only on the extreme downside. But anyway, before we go on to the Iron Condor strategy and how we take it, I wanted to just share with you guys like just buying and selling, buying calls and buying puts. Okay, so in this situation, such as NEO, this is a time that I would buy call only. So you know, you might ask, well, do you ever buy calls or do you ever buy puts? Yes, I do, and the only times I do that is on a stock that I believe is going to go up, or very likely to go up, and it's trading very low, and so the probability of it going up is high, and only if I give myself enough time for the trades. So instead of going for a 2 or 3 week expiration, right? Remember, when we buy options, time is against us. So I want as much time in the options as possible. So I want to go out 3, 4, 5, 6 months or so in this options trade. And sometimes if it pumps quick, you're out anyway, quicker than that. But it's good to give yourself ample time when you're buying options only. And that's pretty much the only time I'll buy a call. If it's a good stock and it's dropped a lot, that's the time I want to buy, and I want to give myself enough time. And I would suggest you do that as well. Anyway, an Iron Condor, let's just have a look at so basically my uncentered Iron Condor, I call it, uncentered Iron Condor. I would trade it. So Iron Condor, there's usually typically 4 strike prices that you're selecting. And just as an example, this was one of the alerts I gave in my group, in the Discord group, on trading on the RUT, right? So which is the Russell 2000, the small cap 2000 in the USA. So these are the strike prices. Okay, so these are not precise strike prices, but let me just show you. If you double click on the line here, you can actually just change that to whatever you want, and that's how you would change it. So you can do that with all of them, right? But these are roughly about right. So basically what we did was we took this trade, and we were to take this trade. What happens is that if this goes up, Russell 2000, we're profit. It doesn't matter how high it goes. Even if this goes to 1 million, we're in profit. If it drops, we're in profit. In fact, if it drops somewhere in this range, we are actually, especially of our contract, right? Especially if it's sort of near the end somewhere, that, or somewhere in the middle, that our before our expiration, then we actually make even more premium, collect even more premium, right? We typically, if this goes up, no matter how high it goes, we make probably around 20 to 30% range on the trade. If it goes to this range, sometimes you can even make 50% or 75% or more on the trade. It's only if it crashes below, then do we start to lose. And if that happens, you then close out the trade at a loss. But it seldom happens, because for these kind of instruments to crash by that much, it is very, very rare, which is why this is the way we want to trade. So that is the trade right there. So now let me take you over to the Interactive Brokers. Let's say we were to take this trade via Interactive Brokers. What you want to do is you want to type in RUT here. And so this is RUT. You click on RUT, you click on new window, click on option chain. Remember, this is all very much the way how we do it. Now, based on that alert, it was an alert that I probably gave a month ago, so we don't want to pick like today, we want to pick somewhere out, right? Remember, typically I choose anywhere between 2 weeks up to 2 months or so from expiration. That's typically what I do, like most of the time, although sometimes it might be a bit more. It will never be usually less than 2 weeks anyway. So let's just say we go for this one, June 20th, expire. Remember, we have to click on here, strategy builder, because when you have multiple legs or different strike prices, you want to put the trade in as one trade, and you click on strategy builder, and that pretty much does it. And then you just choose so you basically want to buy a 1870 put, right? So you go here, you want to buy a 1870 put, so you look for your 1870, and you want to buy it here. And so you just click on the buy side, and then you want to sell a 1900 put. So you then go on to the same bet and look for the 1900 put, but you want to sell this one, which is here, and then you want to sell a 1970 call, right? 1970 call, which is here. You want to sell that call. Right, sell is always the red one, and then you want to buy a 1975 call, right? You want to buy that 1975 call, so you go over here, 1975, and you want to buy that call, and that's your overall trade. Just make sure it's all correct. If you want, if you want to trade 2 contracts, then you type in 2 here, or 3 or 4 on the quantity bet, depending on how many contracts you want to do. And from there, you choose GTC, and then you put a limit price in here, right? Remember, with these kind of Iron Condors, these uncentered Iron Condors, we are collecting a premium for it. So you want to put in minus whatever the price is, right? So you want, let's say you're collecting $700, you want to put minus 7.00, right, which gives us a $700 premium. So if you actually have a look at here, we actually collected $705 for that particular trade, and so so that one trade you collected $700. So typically, if it goes up, we make somewhere between 20 to 30%. So we make maybe $200 or so on that trade as a profit at the end of the day when you close it. When you close it, you have to buy it back. So you want to be buying it back for lower than this price. And if it goes into that good range and we get even more, so if it drops but not crash, then we could make, anywhere between $300 to $600 for this trade. And only if it crashes below it, then this trade really then goes into loss. Then we may have to buy it back at $900 or $1,000, and then we take a loss for that overall. So it just depends on the situation. So, but I hope you guys can see these kind of strategies, whether it's put selling options, whether it's credit spread, or whether it's Iron Condor. It is high probability trades, right? The probability of it happening is very high because we only lose, remember, if the price literally crashes big. Otherwise, we make money. So it's literally, without any exaggeration, 90% plus win rate. And when we do lose, the losses are limited because with these strategies, the losses are always limited. It is impossible to blow your account. It is super safe, which is why I like trading these strategies. I mean, are there other strategies? Are there, more strategies that we can trade with? Absolutely. There's so many other ones out there. There's strangles, straddles. There's just loads out there. Butterflies. There's all sorts of strategies out there, option strategies that you can trade, and I've traded many of them. I've traded butterfly, strangles, straddles, and all sorts. I've bought calls, I've bought this. There's a lot I've traded, and however, when it comes to it, with options, I like to just buy calls at the right time, such as that NEO stock I showed you, or use credit spread, Iron Condor, or sell put options. And the reason I do these is because it's predictable, your risk is limited, and your probability of profit is really, really high. You're not guessing the market, and arguably, Iron Condor and credit spreads, the benefit of these over put selling options is that you don't need as much buying power. You don't need nearly as much collateral as you would with put selling options. So it's another good strategy. So, and then we typically then become the insurance companies, right? You might be thinking to yourself, hey, most traders don't trade this way. Trust me, in the trading game, you want to be where most traders are not. If you are trading the same way as where most traders are, you're going to lose money, because that is why 95% plus of all retail traders in the world lose money. Why do you think most traders lose money? Is because they don't know what you're doing. So you want to be trading in a way where most people aren't. So if this is seeming a bit complicated, this is the reason why I did this course, right? I want to do this course, so you can watch it. And I also offer one-to-one private trading tuition where I can show you literally in front of your screen, like online, one-to-one, how you trade. If you want to take me up on that, by all means do so. And also I've got the Discord group whereby I provide ongoing alerts. So with a mixture of private as well as this course, or just this course along with my trade alerts, you are going to be set in a place ready to make profit right away. And even if you take your time to try and understand this, over a period of a couple of months, you will understand it. It's just human nature, right? It may seem complicated to begin with, but as you trade these strategies more and more, you will understand why that is what we want to do, right? And if you have any questions, by all means, just ask me here. Message me via Discord. Come over to the Discord group. There's a free, a lot of it's free anyway. Come over and ask me any questions you have. I'd be happy to answer. Happy trading.